European Central Bank officials have ruled out a Greek debt restructuring, saying it would create a catastrophe. However, speculation over Greece's debt repayment has caused some big moves in the bond and currency markets. Well, our next guest has a trade to hedge against a possible decline in the euro currency. Larry Shevard, advisor at Efficient Capital Management, joins us now. He's live from the CME Group in Chicago. And Larry, is this a bearish or a bullish trade on the euro?
It is actually a bearish trade, but it's fairly complex because it's a neutral trade until June, which the expiration is 3 weeks away, but ultimately a very bearish trade.
All right, so why don't you lay out the trade details for us?
Absolutely. Right now, I think with volatility the way it is, we need to take advantage of short skew in June. So I would be buying the SEP 140 put. Buying the SEP 138 put, selling the June 140 put, referencing euro currency 142.65. Right now, you can take the privilege of that trade for 187 ticks. That trade is a little complex to the point where you don't want euro currency dropping below 140 in the next 3 weeks. But beyond that, you've subsidized a September put, which right now is trading at 250 for the price of 187. Break-even point is much lower, 136.13. But keep in mind, that's where euro currency was back in February. And if this long currency, long commodity, short U.S. dollar trade begins to blow up like it started to do last week, this trade will work out very, very well.
So, Larry, let me just clarify some of these terms here, because we did go through a lot, and like you said, it is complex. The SEP 138 puts right now the euro versus the dollar is trading at about 143. So you're really expecting to stay above that range? You're not expecting it to weaken until we actually get closer to the end of the summer?
No, I want euro currency with this trade. Euro currency can definitely stay above 140 because you are short a June 140 put, which expires the first week of June. Beyond that, you're long a September 138 put. So with the combined net price of 187 on the trade, you want euro currency to be at 136.13 by September expiration.
All right. And is there a particular catalyst that you have in mind for the trade working out?
Oh, a lot of catalysts. Right now, everybody's focused on the risk-on trade, the great economic data in Germany and France, 6%, 4% GDP on an annualized basis. That's wonderful. But on the other hand, if you listen to what S&P said last week, that Greece is going to have to slash their bond face value by 70%. Could you imagine if that came true? The haircut with the banks in Europe, it would be a catastrophe. Right now, I think it's just an accident waiting to happen. We're playing a game of what's, chutes and ladders, the old board game, and there's a lot more chutes than there are ladders in Europe. So medium to long term, I am very bearish to euro currency.
All right, Larry, thank you so much. That was fascinating. That was Larry Shevard, advisor at Efficient Capital Management, with today's options update. Very bearish trade on the euro.